Welcome to Unlayer, the show where we explore next-gen blockchains. I'm your host, Sal, alongside my co-host, Dave. And today we're chatting with Ryan Connor. Ryan is a researcher at Blockworks. He's very familiar with the podcast circuit. He's a host of one of their shows and expert on a lot of things in crypto, which we're going to get into throughout this episode. But first, let's just start with Ryan. How's it going? How are you feeling about this market?
Oh, geez. Well, first off, good. It's great to be on. I've been a listener since day one of the pod. I think what
Very
you guys
nice.
are doing is really great. How am I feeling about the market? So
Is it over?
for it's certainly over.
All
No,
right.
no, no.
There we go.
So for like the first 7 years of my career, I was a macro investor, very focused on short-term time frames, sub 1 year. I'm doing my best to reorient myself, and I've done a really good job of that over the past few years and thinking of on longer time horizons, being more fundamentally oriented. So I'm doing my best to not know the price of Bitcoin. It's below 60. I know that much. I know Germany's selling. Um, but I think like when the biggest piece of bad news is that like a big person is selling or a whale is selling, like it could be worse, right? It's not a massive leveraged unwind. An exchange hasn't committed fraud. The government isn't like cracking down on all the crypto on ramps and off ramps. Like things could be much worse. So long as we're not having a recession in the US, which the macro data is softening, but it doesn't look dire. I'm cool with it. Like volatility is a gift, and the bear market is going to continue.
The Bitcoin selling as well is at least finite. At least there will be an end.
Right. No, I agree. It's hard to time these things. I haven't been in crypto for too long. I really started investing in the space in Jan 2021. And, so that was like kind of mid-cycle. It certainly wasn't early. There were like 3 months before, and then you had DeFi summer, obviously, that like where crypto really ripped. And I like if you're getting in that late to a cycle, you really have to time things, I think. You really have to be focused on timing. Whereas investing through the bear, this most recent bear, like you're fine. So long as you had like one or two winners, like you're fine and you're happy with your cycle returns and you really don't have to like play this game of hot potato that I think everyone who's been getting in over the last few months has been playing. So as long as you're not playing that game of hot potato, I think you can just ride it out.
Looking out, though, do you think, or rather, I'm seeing a lot of discourse in the timeline where people are no longer interested in any alts. They just want to hold Bitcoin, Sol, ETH, and everyone's really bearish on valuations. They're bearish on the fact that meme coins get all the attention. I mean, are they right, or do you have another take here?
I think that when people look, when you lose money, you become apathetic and it's hard to like what's going on in the market. And I think that a lot of what happens in like the CT discourse is that retail comes in after the coins are already ripping, buy some coins, they see some gains, but then the pullback inevitably happens and like frustration occurs. The other interesting thing about this cycle, I think, is that a lot of people were probably over allocated to ETH and it's done absolutely nothing. And that's really frustrating for something that was like such an obvious winner, right? This cycle. That I could see that as a huge point of frustration. Like you're also seeing the L2 valuations like really come in. Like Blast is super interesting on like a price to fee, like from like a price to fees perspective that thing is the cheapest thing in crypto. And like obviously like the TVL is going to come in, the fees are going to come down, and like we have to wait to see what's going to happen after like farming, like the full effects of that like farming subside. But like it's those L2 valuations are disappointing investors now as well. So I think it's really easy to get apathetic. Um, however, I mean, there's a lot of really interesting things happening in crypto. I think that meme coins are I think that that space in the market is super interesting and investable. I think that the crypto AI intersection in the way that it's changing markets. There are a lot of opportunities there. Um, I think in the DePIN space, you have a few protocols that can generate real revenues that are trading at realistic valuations that aren't crazy like everything else. So you really have to pick your spots. Um, and this pullback is going to give people the opportunity to do so. So if you got some cash, like I don't see, like there's no reason to be down on this market right now.
I feel like a lot of the apathy which is currently in the market is outside of Bitcoin, Ethereum, and Sol. It's very hard to see how value from the actual protocol relates to the token price. You're just talking about the L2 tokens. I think the reason they're not doing very well is because obviously there's this large overhang, so there's lots of tokens coming onto the market, but it's also the fact that the value isn't accruing to them. Even in something like DePIN, there should be some value coming in, but again, it's not very clear. So are we not at risk of just ending up in this very apathetic place where, as we've been saying, people are just in the big three? They're probably in meme coins because at least it's honest about what it's trying to do. And everything else, we need to wait for regulations potentially until actual value can accrue to those tokens. What do you think about that?
Yeah, I mean, I think it's hard to argue with that. I think that look, everyone's talking about the ETH ETF right now, and a lot of people think like that opening up like that avenue to like the wealth channel and the asset allocator channel is going to be bullish for that token. Um, I think that like that's going to disappoint some people too, right? Like first, the timing is like really poor. They're opening up, they're saying like, hey, come invest in this new product to TradFi when TradFi's on vacation. Like it's July, it's August, like every managing director is going on vacation. Like, you have summer Fridays, like volumes do experience seasonality here and they really compress. So much so that TradFi investors like do not take price action as seriously in July and August as they do in other months. So I think like I think that there's the possibility for disappointment there. Um, I think that it isn't obvious that this ETF actually like fits into investor portfolios right now either. So if you think of like if you were an asset allocator coming into 2024 and you wanted a crypto allocation, you didn't expect that ETH was going to get an ETF, right? You thought Bitcoin was coming, but ETH you had written off. Gary wasn't going to allow it. Then Gary surprised markets. So let's say you bought the Bitcoin ETF on day one. It's appreciated like 2x since then, at least 50%, right? And you probably topped up that allocation for the year. You're over allocated right now. And then you get a surprise with the ETH ETF coming to the market. You don't have the space in your portfolio for that asset. More importantly, like look, a lot of these asset allocators, they allocate on like a very like using modern portfolio theory, right? It's all about the um return enhancing characteristics of the asset in relation to the volatility and the correlation with the rest of your portfolio. And ETH is highly correlated to Bitcoin. And over the last year or more, it's underperformed. Like it's not exactly clear that ETH adds diversification and expected return benefits to a portfolio for a TradFi investor, especially when they're over allocated. So like you talk about like, crypto investors being disappointed. There's not a lot of value out of there. Like the one thing that the market is hanging on is like this ETH ETF. And like, I think that at least in the short term, it may disappoint some people as well. So it's like, if we're thinking short term, like how do we want to think about this market? Like I'm more optimistic about Q4 than I am like the very near term and maybe Q1 25.
It seems like a lot of people are agreeing with and aligning with that timeline. From what I'm seeing, I have no idea. I do agree though. Summers tend to be a bit slower, just for a lot of reasons. So I think by fall, late fall, we should probably see things start to pick up, hopefully. So let's get into TON. This is something that Blockworks put out a research report on. Interestingly, it was a bearish research report in some ways. I think it kind of dampened a ton of excitement for the TON ecosystem. I don't necessarily agree with it, but I think this will make for an interesting conversation. So what is your high-level take on TON?
Yeah, so I think just like objectively, TON coin and the TON ecosystem are two of the most interesting things in crypto today. TON coin is interesting because the valuation is so high, and the TON ecosystem is interesting because they have this like very unique relationship with a gigantic Web2 company that seems to really want to integrate it into its business. That is objectively very exciting. And in the report, like we go over the bull case, we do not dismiss it. Like the bull case is the bull case. You've heard it from every research shop, multiple investors, like a lot of like monthly and quarterly commentaries. Distribution is the most powerful force in finance, in technology markets, arguably. It's the reason why like Apple was able to flip a switch on the phone and enable payments and generate $2 billion in revenue within 24 months. It's how Microsoft was able to whittle away at AWS's market share because they had pre-existing distribution on-prem with enterprises. Why Teams bested Slack, right? Even though like Slack is just like objectively better, Microsoft has distributions into enterprises. Similarly for TON, like this distribution relationship that it has with Telegram is objectively like very powerful. Telegram is one of the most used apps globally from an MAU perspective. And because they're so prominently featuring this like wallet within the application, it's not unlikely that people are going to click that wallet and see what happens, right? Like, so there's a very strong case to be made that like the distribution, Telegram's distribution is very powerful and therefore bullish for TON. The other interesting thing about the bull case is that sometimes explicitly, sometimes implicitly, we're talking a lot about WeChat and Telegram becoming a super app, an app of applications, a platform for developers to build on and then, get that distribution. But I think that that's from a very high level, all those things are true. When we dig below the surface, there's some nuance there that's important to consider, especially in light of the valuation, which again is very high. So from a distribution perspective, first, Telegram's distribution is MAUs is not the best way to describe it, or it's not the best measure. So when I think about messaging apps are like integral to day-to-day life. They're integral to us personally and professionally. And the way that I bet Telegram is thinking of this internally is from a DAU perspective. But apps publish MAUs because the MAUs are always bigger. So from a DAU perspective, like that's like your monetizable user. That's where you can really drive revenue growth. And the interesting thing about Telegram in the context of the greater app ecosystem is, according to data from SimilarWeb and various other sources, Telegram's daily active user to monthly active user ratio is very low for a social or messaging app. Now, like there's some assumptions in that calculation. We're relying on private estimates from SimilarWeb, but apples to apples, you can see that social apps will typically have like a ratio between 40 to 80% DAUs to MAUs. Telegram's is like 15 or 20%. So the penetration, in my view, like you need to adjust your valuation for that potential penetration or monetizable user that Telegram actually has relative to other apps. The next kind of important note on the distribution, in my view, is that we're making all these comparisons to WhatsApp in terms of distribution, but Telegram's distribution is extraordinarily fragmented versus the distribution of, let's say, WhatsApp. So WhatsApp sold or funnels users into a very like single homogenous market.
You mean WeChat, I think.
Or sorry, WeChat. Sorry about that. Into a single homogenous market. Mainland China is known to be one of the easiest markets to navigate because it's culturally and linguistically homogenous. If you look at Telegram's distribution, Eastern Europe and APAC ex-China are its two biggest markets. And there, like, distribution isn't as straightforward. So if you're a developer and you're thinking about using Telegram as a distribution platform, like, it's not 900 million, right? Like, you have to make choices around the language that your app appears in, your comms, your sales, your marketing, and then the people that you hire boots on the ground to sell that app. It's you have to make those choices, and based on those choices, like, the distribution is much lower. So the 900 million, I think, overstates it. Because the real, like, the boots on the ground fact of the matter is, like, you have to pick a sub-market, and the sub-markets within Telegram are much more fragmented than, let's say, WeChat. The last kind of like issue that I see with the bull case, unrelated to distribution, is this like Fund C developer paradigm where, like, look, just from a high level, you look at Solana using Rust. Rust is not the most widely used language, but is a very admired language. It has a very enthusiastic following. You look at Solidity, which looks a lot like JavaScript, and it's a very widely used language, so onboarding there is a little bit easier. But if you look at Fund C, it looks a lot like C, and it's not particularly admired or widely used according to developer surveys. So that's like, it says something about developer onboarding. Now that's like certainly like, you can do something about that, right? Like, you can make, you can develop tools that make that experience easier, and they are attempting to do that. The problem is that what we see, and this is like publicly available information, you can see chatter on Twitter about it. There are L2s raising, some of them EVM L2s on TON, to solve that developer friction point. And if you are building an L2 on TON, like, to me, that's a value capture problem for the TON ecosystem, because the L2 is going to own that relationship with that EVM developer. It's not going to be TONcoin. It's not going to be the TON chain, right? So when TON is used as a settlement layer instead of an execution layer to solve those frictions around Fund C, like, you have to question the amount of value accrual to TONcoin. And look, every investment should be taken in context of price. If, like, I keep saying this, and it's a wild example to illustrate the point. If TON is 1/50th of the price today, it is a massive buy. Like, I think all of us put a significant portion of our wealth into it, but it's not. It's trading at 950 times fees. I think the median L1 or L2 token is trading at 500 or 600 times fees. Solana is trading at 130 times fees. Arbitrum is trading at 100 times fees. The growth is priced in, so it's not a secret that, like, TONcoin exists and it has this distribution relationship. Again, it's that price tag that I think is the biggest strike against it, in context of these nuances around, like, ecosystem fragmentation and, like, the problems with Fund C.
A lot to unpack there. So let's start with Val, because I think that's one of the key drivers of this thesis. TON's trading at about $18 billion market cap on an FDV basis.
It's about 40, I think. It's about
like
half
35
of
or
Solana,
40.
I think.
36-ish. Okay. So with respect to TON, I think I don't necessarily disagree with like the fact that it's very uh, heterogeneous distribution. Like users are in a lot of different countries that all have a lot of different cultures. But what you're seeing though, in spite of that, and like a good proxy to see how popular some of these mini apps are is to look at how big their channels are. So you can look at this data. The top 10 or so biggest channels, I think 8 or 9 of them are all mini apps that use Ton in some capacity or are going to integrate Ton at some point. Maybe launch a token on it or what have you. A lot of them are these kind of uh, click farming games, which some are proclaiming is a spiritual successor to Play to Earn. I don't disagree with that at all. I think there's a lot of similarities there. And these numbers are staggering. Hamster Combat, 48 million subs in their channel. TapSwap, 25 million subs. Pixelverse is 10 million subs. Notcoin, 8 million subs. These are astounding numbers. These are theoretically net new users into crypto. I've always held the thesis that the easiest way to onboard someone into crypto is to not make them use crypto, at least not in the beginning. Do stuff off chain, reward them on chain for sticking around and for doing things, the right user behavior that you're trying to incentivize. And those numbers are insane. And I think they kind of maybe perhaps weaken the argument that people using Telegram aren't as engaged. And $900 million users monthly active, I believe, is overstated. I mean, these numbers are not that easy to hit. Certainly, they're maybe 100x bigger than the number of people that use something like Farcaster or whatever. Name your popular classic consumer crypto app. So, I mean, maybe let's start with that. Like, what do you say to kind of the insane adoption metrics around some of these mini apps?
I think that when things are financialized, people do their best to farm the thing. I don't know how many real life users Hamster Combat has. I know that they've claimed in their public comms to have 250 million users. I know that you're saying on the channel there's 48 million. Look, it's a very low barrier to entry to click the thing. I've tried it myself. I didn't stay around for too long. I didn't see the utility.
Oh, there's utility.
Yeah.
There's the game.
There's the game.
We should probably do the game too.
Right. The gaming is that you click until you get to a point and then it
It's
like resets your score and then
it's like a really crappy version of like Street Fighter. It's basically you have these two pets and you have to click a different zone and you have a health bar. I was playing some random person on it. It was interesting.
Could it not just be a new form of mining? And I appreciate that. I think the issue is that you're not really having to put anything to stake, and therefore it's just infinitely, you can Sybil it basically. But could this not just be mining for a token which has had a fair release and become sort of a mimetic or store of value or something like that on the Ton ecosystem? Because in your report, you completely ruled out tap to earn as a future area, and I probably agree with you, but I think it's just worth the intellectual exercise to see whether it has got any legs.
Yeah, like the friction to playing is very low. And I guess like the friction to therefore having fun, assuming that the game is fun, is very, very low. So that's great. I am like, at the end of the day, I am skeptical of the amount of users. Just like that 250 million like person number in context is greater than the population of Russia, which is like the #1 country like using the Telegram app. So I'm highly skeptical of it. I wonder the stickiness of like this kind of onboarding to crypto, like the like giving out phantom money to get people to onboard onto wallets, because like I don't think that Axie Infinity like was sticky for the people in the Philippines that were using like that system. I don't know.
Yeah.
Do you guys know the daily active numbers on Axie Infinity? That it would be interesting to know that and then try to reason about how many people stuck with crypto because of that. I don't think that it's much.
Well, I think Axie is just interesting because everything was liquid right away, so you couldn't control the market. They were kind of subject to Terra Luna. Same with Step in some ways. Whereas these games, they actually don't give you anything, at least to begin. Some of them haven't launched the tokens yet. You're just getting points or whatever you want to call it for those specific games. One other interesting metric, though, is let's take Pixelverse, for example. They have 9 million subs. Their YouTube channel gets 2 million, 4 million views, their official channel, that is. And there's no economic incentive to watch a video. So I suspect these numbers are actually more real than people are giving credit for. I also don't think it's particularly easy to Sybil Telegram. This is mostly anecdotal, but I've tried making multiple Telegram accounts before because for testing stuff on Bullpen, we're a Telegram mini app. And I had to, like if you try to use Google Voice or something, it'll get banned like within a week. Same thing happened with one of our engineers. I had to actually like get another phone and set it up that way. And that's the only way I was able to persist my second Telegram identity. So I think they've put in a lot of effort, the Telegram team that is, in, because they don't want a bunch of spammy users, right? They're a normal Web2 messaging platform. They want to keep it as clean as they possibly can. I think they invested a decent amount of resources in preventing this, which is actually why I'm extremely bullish on Telegram and Ton, because they've done a lot of this heavy lifting for us. All the developer has to worry about now is just, can you get your app to work within the context of Telegram? You know, lean on some of the primitives they've built, lean on their onboarding, and it seems like it's working in some ways.
Yeah, the coolest thing about Telegram is that the Telegram bots that crypto has, like the successful ones have really printed, right? Like they've generated like real revenue. There's something to say about minimizing that like trading UI down to like a messaging format. I think that's super interesting. Look, I like strong opinions held loosely.
Sure.
Like if Notcoin rips, or sorry, if the project, like if the fundamentals compound, if we start seeing like real apps being built, if like the L2 thing is figured out and Ton is more of an execution layer than a settlement layer, like think about that investment very, very differently. At the end of the day, to me, it all comes down to price. And you could assume that Ton fees 2x over the next 12 months, which they very well could. Like that is priced in today.
Yep.
And in a mid-bull market environment, like your margin of safety on that investment, like you have to trade it. You have to be in and out because your margin of safety is very low. Like in a bear market, which we will inevitably have again, like Toncoin's going down 50% in that environment. That's just like beta. That's table stakes. Like we'll put out a piece and reevaluate that thing if the valuation makes sense in context of like the kind of boots on the ground fundamentals.
And also comparable prices is so important. And I think just as Sol price is probably restricted by ETH price is restricted by Bitcoin, I think Ton price will be restricted by Sol. And at the moment, it's about 50%. So I think it's pretty hard for people to say that this should be worth any more than that, and potentially a bit less, given the amount of adoption that the two have received so far.
Yeah, I think that's a fair bogey. People do look at those things, like you have to take them seriously. I think the more interesting thing is like, I've seen plenty of like back of the napkin analyses that take the 900 million number, like they slap a conversion rate on it, and then they scale up the Toncoin valuation by like that in combination with some other metrics. And like, that's fine. But for a new buyer, you're mid-cycle, it's a $40 billion valuation today. Again, the fees could 2x, you're still valued higher or in line with the market. Like that's completely priced in. Like what is the margin of safety for someone who has no exposure? And like, that's what BWR is trying, or Blockworks research is trying to answer right now. Like if you don't have a position, does it make sense to ape in today? And like the conclusion today is no. I'm excited for when that changes, because then we'll put out another report and reassess.
You also had an interesting piece in the report where you said that WeChat has its own dominant payment rail, and obviously Telegram definitely doesn't have that. But in a world where crypto becomes the de facto way to pay people, getting set up this early, getting this number of wallets into hundreds of millions of people's hands, it has the opportunity potentially of becoming a dominant crypto payments provider, and then from there you could potentially leverage that position to monetize.
Yeah, it's certainly an important strategic asset. I think that um, payments are probably most interesting where payments are restricted, because crypto in a lot of ways is a regulatory arbitrage on TradFi or regulations in TradFi. Like, just like speaking facts, like that's what it ends up being a lot of the time. Um, in Eastern Europe, there are like payment issues, right? Like you have multiple currencies, you have sanctions on Russian citizens. Like, it makes a lot of sense to circumvent that via crypto.
And I think India as well is another example. I don't know how big Telegram is there, but I think it's difficult to get money out of India. And so, yeah, I agree. I think there's a big market for those sorts of things.
Yeah, totally. Not dismissive of it. Again, all these things are important. Web2 relationships are important. Like, they are, like, first looking at this space, the most interesting thing about crypto from like a strategy perspective is like things are forkable. Like, you can have your app, your contracts forked away, and like the Sushi Swap, Uniswap thing is just one classic example. It didn't ultimately work out for Sushi Swap, but there was a real threat there. Um, Web 2 or like off-chain relationships are a moat, right? Like, they are a very important strategic moat, and one of the very few that like Web3 native things have. So undoubtedly, it's a positive for like Toncoin. Um, but again, like, positive at what price?
And sorry, can I just say that I think it's appreciated during the middle of a bull market to actually see some bear case reports coming out, because Messari released a report on Ton yesterday, and it covered the bull case pretty well, but didn't really touch upon the bear case at all. So I think it's good to see this, and it's maybe strange that it doesn't happen so much in the industry, perhaps because people, maybe these research houses are getting paid to do these reports. I'm not really sure what the reason is, but why don't we see more negative, more bearish outlooks on assets as you would in TradFi?
I mean, look, I think that, like, statistically, if you were to take the S&P 500 and you were to see over what time frames like the thing went up versus going down, like, it's up, going up 80% of the time, it's going down, maybe it's probably less than 20% of the time. It pays to be bullish. And when price is ripping, like in TradFi, like as an analyst, if you're against that thing, like, you have like a lot of career risk. I think that's pretty real. Um, I think that the nice thing about crypto is that it's open. We can have these discussions continuously, and you can update your view like very, very rapidly. So I don't know, maybe more analysts will see that. And like, so if you're an analyst and you see the bear case in time, but everyone is saying that like it's obviously a bullish thing, um, like, you can just hop on a podcast and change your view as the facts come out, right? And like, these conversations maybe help push that forward.
Couple of other points I think we want to just underscore here with Ton. One is, I think people are sleeping on stars, which could actually be a really cool entry point for net new users of Ton itself. Essentially, stars are these, it's like a off-chain currency of sorts in Telegram that you can buy or earn through Telegram itself. It's fully supported by like the native in-app payment system, Apple Pay, what have you, whatever device you're using. And developers will soon be able to kind of use those to essentially trade them for tokens on the Ton network and use that as almost a payment system. I believe Telegram channels also, like, owners can earn payments in stars. So between stars and the fact that usernames are tradable, they're essentially tradable NFTs. These are two primitives, fungible and non-fungible digital assets that are Telegram is fully starting off as kind of Web 2 in an environment that people understand and enabling them to take advantage of crypto. instead of starting the other way, which we've seen in every single cycle. This is an NFT. Here's why you should care. These are just things that people already kind of want to do. They want to trade usernames. They want to earn the in-app currency of sorts. And then you can kind of bolt on the Web3 functionality after the fact. I think a lot of interesting experiments will be run on those two primitives alone. And kind of the final point I'll make is, yeah, I agree. The biggest perhaps risk or friction point is just the challenges of building on Ton, and there is a bit of like they haven't been battle tested yet in terms of sheer usage. A lot of their activity, like we mentioned before, is off chain. The transactions aren't super complex right now, but I think that's a very solvable problem, and I'd actually prefer people solving that later versus the current paradigm is VCs invest $100 billion in infra to scale blockchains, and no one ends up using any of that stuff. Maybe we should start the other way, and that's kind of what Telegram's doing. They're in fact probably the only L1 I've ever seen that is truly going the complete opposite direction from every other L1 and focusing on users, distribution, getting people in the door, and then they'll figure out how to make it more developer friendly. There'll be wrappers where essentially I think people will just be making smart contracts or whatever their business logic is with a different language like TypeScript or what have you. So I think that stuff gets solved over time. They're by far the most interesting, at least I've seen so far, just in terms of the sheer consumer usage, the adoption in overseas markets, and the fact that it's already a juggernaut that has a lot of usage. That is, I think, the only Web2 social company that's using crypto in a serious way.
Yeah, it was super disappointing last cycle when Instagram announced that they were going to integrate like Solana and Ethereum NFTs. Like that to me was a very significant moment.
Mhm.
If you're excited about the distribution that Telegram has, like you have to be, 4x excited about the distribution that Instagram has. That was really disappointing. But they're focused on AI. They're doing their thing.
Yeah.
Yeah, I think, look, the real challenge here is that, we can talk about fragmented distribution or like the challenges with Fund C or whether or not Toncoin can accrue value if there's like an L2. The real kind of, there's a pre-established norm with OS level applications in the modern world today, whereas WeChat rose to prominence before that norm was established. A lot of developers, like the users, live at the OS level, right? And in a lot of countries outside of China, they're using OS level apps, not in-app applications. It almost is an added point of friction. Like I love Telegram. I use it all the time. I experiment with MiniApps whenever I can. But I do feel like this added point of friction to open an app and then go into another app, and like from a cost per click perspective, like there's some drop off there, right? WeChat had like this very path dependent rise to prominence where that norm was not established yet in China, of OS level applications. It'll be interesting to see if Telegram can break that. Like you have to offer a really compelling experience to bring the user from the OS level to the in-app level. Look, the product's awesome. Can they execute on the new thing? Like we'll see. I hope they do.
A lot of analogies there too. I think also Chrome extensions, which live in a browser. Granted, people spend a lot more time in browsers, I think, than messaging apps, but there are some analogies there. Um, with respect to L2s, what is the actual value accrual mechanism for them? Because as I understand it, they're typically not used to pay gas, so there's no reason you really need the token. And as far as MEV is concerned, I don't think like a holder of an L2 token would get any economic benefit from that. So how would you think about value accrual for L2s?
Yeah, I'm not an expert on all the internals on L2s today. Like I very much get my information from the broader Blockworks research team. But the way I see it is that they're all chains with tokens, like they can accrue value in the same way, which is through fees and MEV. Now there are problems when you have a single box, when you're operating a single server and you're taking all the fees and MEV. right?
Mhm.
It's my understanding that there is some like money transmitter problems there,
Right.
forcing people to use your token. There's a regulatory barrier there. Let's assume that that goes away. Like, I think it's the same and let's assume that you can decentralize this L2 layer with shared sequencers or whatever. Like, I think it's still fees and MEV, and that's the only way.
Because you could decentralize the sequencer not using a shared sequencer, but just decentralize your own amongst the token holders, as I understand, and then it would just operate like an L1.
Exactly. You just do the L1 again, and then you lose a lot of the benefits of the L2. So it's like, it's a rock and a hard place, right? But at the end of the day, like, it's all fees and MEV. And like, for simplicity, if you're taking this data from a high level, like, you should adjust it on a token by token basis. You should look at how they're accruing value. You should look at the bells and whistles that they're using, and you adjust your model for every single one. For now, like, these things are always in flux. They're changing from time to time. And there's like this at the limit analysis where you can say like regulations ease and like where all these tokens going to go long term. So it can get complicated, but for now, fees and MEV, like, that's your cash flow, and slap market cap on top of that, and you have a relative value metric that you can like compare all these things.
Hmm. But I always, I guess, like, I think maybe we don't want to underestimate that reg point, which is the tokens themselves are just like governance tokens. And so this is all theoretical, like that they would ever get any economic benefit from fees or MEV. So I don't know, pricing that risk, I feel like I just don't see a world where those are any more compelling than something like TON, for instance, which is, it's a cleaner kind of setup there. It's a true L1. You do have to actually use it to do things. You can maybe stake it and then get exposure to the MEV if the validator shares that. I just never understood how that works for L2s. I mean, some of them have native yield, I guess, but that's not super compelling unless, like, to your point, that can go up a lot as usage goes up.
Yeah, so I think that in respect to the TON question about like, is it going to have EVM L2s? Yeah, look, if there are EVM L2s, like, less MEV flows to Toncoin, fewer fees flow to Toncoin, like that gets figured out at the L2. So that really changes the value capture mechanism the same way it does for ETH today. If you look at ETH's revenues, like, their highest month in revenues, I think, was November of 2021, 1.8 billion in fees and MEV. In the most recent month, I think they made 160 million
Wow.
in fees and MEV. Like, you have a 90% drawdown there, and you're at like April 2023-ish levels on monthly MEV and fees. So a secular decline because Ethereum has decided to outsource its execution to L2s. Like, that's a big deal. And the way I'm thinking about this, and this is like, look, we'll see if this thesis plays out, but markets are a function of their participants, right? If you took like three non-financial people that don't know anything about companies and you had them trade these like arbitrary stocks and they were the only people trading them, the price action on those stocks would look nonsensical, right? Like, you wouldn't understand why the things were doing what they were doing when they reported earnings or whatever, because the people don't understand finance. They don't care. If you had a bunch of hedge fund managers just trading those stocks, they would look much different, right? The price action would express the underlying beliefs of those hedge fund managers. In crypto, you're moving from a retail dominant, or over the last 10 years, you've moved incrementally from a retail dominated market to an increasingly institutionally dominated market where these tokens are starting to generate real cash flows, right? So like, let's say Trump comes into office and pulls back, or like just sets a regulatory framework for these things, institutions can now participate. Like, when the marginal buyer is a like guy with a CFA who has learned of cash flows all his life, and he finds out that like ETH token holders accrue like cash flows via fees and MEV, and like token holders accrue cash flows via fees and MEV. Why wouldn't he use like a price to cash flow measure to value these things and think about growth rates in that way? So like as we move like closer to that world, I think these measures are really going to matter, much more so than they have in the past.
I mean, both of us have been talking about this for the last year or two. It's just insanity to me that people fight against it. But you recently did a really great tweet comparing Sol versus ETH valuations. Basically, that Sol is, on metrics perspective, is in a much, much better position than ETH. And some of the pushback you got from that was people saying, well, ETH won't be valued on the fees it's receiving, the revenue it's receiving. Instead, it's going to be valued on the moneyness of the ETH asset. But even that is something which I struggle with, because post Firedancer, the numbers which now we're starting to hear from the Firedance team is like 1 million TPS within 2 years. So even if ETH has all of these L2s and they're all using ETH, unless the number of TPS going through all those L2s is going to be 10 million or a billion TPS, which I don't think anyone believes that, I don't really see the difference in the moneyness argument, just because ETH is being used across loads of different L2s versus just in Sol's instance where it's just being used on the L1. So do you hold much credence to this moneyness argument? And do you think that ETH has a stronger claim to moneyness in the assumption that both of these ecosystems grow to the same size?
Yeah, kind of 2 points. I think that first, anything that has cash flows will be valued on those cash flows, at least as a function of the valuation, right? Like that is true. If Larry Fink comes out tomorrow and he references the price to sales ratio of ETH, like things are going to change. Second point, I'm willing, since I've held for a long time the view that nothing in crypto is even close to money. The BWR guy, like the guys on my team, they're all super smart. They've changed my mind on a lot of things. Maybe they changed my mind on this, and like kind of I am moving slightly in that direction. But I think objectively, if you look at the market today, nothing is money in crypto. Nothing is even close to being money in crypto. In fact, crypto market participants have shown have a revealed preference for US dollars over BTC and ETH and Sol and everything else as money. So if you look at like think back like 5 years when like you could go on Binance and like there was a lot of trading pairs denominated in BTC. There are a lot of trading pairs denominated in ETH. Like the dominant trading pairs today are all denominated in USDT, USDC, right? Stablecoin volumes are up and to the right, whereas listings, with BTC and ETH as percentage of listings on trading pairs is down and to the right, right? So the market is literally choosing dollars over crypto assets. Even in the instances where it's like crypto is like this regulatory arbitrage on the traditional financial system via payments, or like you can use crypto to get around sanctions. Like Venezuela is taking payment in USDT. Like people aren't using Bitcoin for that. They're using dollars. Like the revealed preference of people globally is that they prefer to hold dollars. They trust the US government more so than the local currency. And like, look, I think it's of strategic importance that the US really leans into that. Like, who knows if they will? I hope that they do. I think that the way things are going with the elections, like that's probably possible. But yeah, crypto has very much a revealed preference towards US dollars over crypto assets. I think kind of like the last point is that I kind of don't care that gas is denominated in ETH and Gwei. I think it's irrelevant because although it is technically denominated in ETH, people do not account for it in ETH. No one is wondering, like, go to Coinbase's 10K and their 10Q. They say that they do not hold any ETH above what they need to operate the exchange that day. And then look at Apple's and Google's balance sheets. Like they hold $100 billion in USD. It's well above the operating cash that they need to fund operations, right? So there's a clear distinction here. Even go to like application companies on Solana, or like go to deep in projects who need to hold Sol to transact on the Solana blockchain. They don't. They hold dollars and then they get the Sol when they need it and then they transact. They're effectively denominating their gas cost in local currency and not the blockchain-based currency. And until I see that changing, like I do not buy the money argument at all. I think you are so far away from money. It's not even worth considering, uh, to to be honest.
It's a fair point. Um, yeah, I guess it just depends on like how your view of the dollar is over time, like not necessarily in the next 5, 10 years, but in the next 20, 30, 40 years. Will it be challenged? Will crypto subsume that in some ways? I think what you've seen with the movements on the petrodollar side kind of signal a more global shift away to de-dollarize a bit. I'm not really an expert on that stuff, but it does seem to me like the risk of the dollar being less relevant is about as high as I've ever seen over time. But again, probably not like a short-term thing. And I do agree most people still kind of prefer holding it in emerging markets and denominating expenses in it and so on and so forth.
Yeah, I think kind of 2 points there. The first is like the historical perspective. Have you guys read the Market Wizard books? I forget the author's name. Basically, Market Wizards, it's like a 3 or 4 book series where um, they interview great investors about their careers and then what they think about going forward. Like what analyses did you use, and like I don't know, how's the world changing? How is the world changing? How is the world changing, and whatever. Um, if you read the first Market Wizards book, and these are some of the greatest investors like in history, they basically say they are so scared of the US deficit, the dollar is in the weakest position it's ever been. I see a real crisis on the horizon with the ballooning debt load in the United States. That was 1990 and it never happened. When I first really started getting into macro in high school, like I was like, okay, I was in high school, granted, but I was pretty convinced hyperinflation was around the corner. Like Ben Bernanke was printing dollars hand over fist. There was a financial crisis in the United States, like it extended to the Eurozone. Like there was there were real risks there, and there was experimental monetary policy. Didn't happen. Um, Today, like yes, like you can point as like you can point to interest expense as a percentage of like GDP. You could
Yep.
point to like the use of the like Chinese yuan on the for global, or I think it's cross-border payments, has risen from like 50 bips historically to like as high as like high 3% or maybe even 4%. Um, but if you look at like the debt to GDP ratios of these other countries, if you look at their monetary policies, if you look at their like growth rates, United States is best house on a bad block. It's all
Yep.
about the alternatives there. And Bitcoin cannot handle payments. ETH layer one cannot handle payments. There's a lot of friction to people actually using these things. Um, and the revealed preference for like you can think of it in like 2 layers. There's like the government layer and then there's like the citizenry. And the governments don't want US dollars. Like that's very clear. Like China wants control of their monetary policy, and Iran wants control of their monetary policy, and Russia wants control of their monetary policy. But the people have a revealed preference for dollars. And like what's going to win out in the long run? Like I view these governments as like super unstable, especially compared to the United States. Like the United States is not great today by any means, but it is relatively more stable than these governments. So I still think they have a leg up. I still think they have a leg up. The dollar is in the best shape it's ever been. The dollar is up since the lows in 2008. The DXY is up like 50% against a basket of competing currencies. It's strengthened. When financial crises happen, the dollar goes up in value, not down, because there's a massive rush for dollars because it's a safe haven still today. When that changes, like I'm willing to change my mind, but I don't see that I don't see that price action changing in the dollar. I don't see and I don't see the revealed preference of like the masses of people really changing.
Do you also think the recovery was helped by that sort of being the start of this tech phenomenon that we've seen over the last 10 years or so? I think 2012, 2010 is when things really started to accelerate, just after the credit crisis. And US stocks have obviously absolutely ripped. I'm over in Europe where everything's been flat. Currencies have been devalued. And so we're in this pretty depressing position. Whereas often people say if we're going to escape from this downward spiral, then tech and innovation is the only solution that could pull us out of it. And I wonder if that did help the US over the last 10, 15 years.
Yeah, I think two things helped the US. And this is coming from a guy who used to do macro and no longer does it because I don't want to do it. I don't want to do it anymore. It's like way too hard. But I think there are two big trends over that decade. I think one was the technology sector. It was software. And Silicon Valley was the place to do it. It happened in the United States. We had the venture capital, like we had the mines, we had the universities, like it worked here. We had the developed capital markets, right? That really helped. I think the other thing that really helped is monetary policy. Like, I think that we found out that printing just a little bit of money and buying just a little bit of debt over time actually really smooths things and like minimizes a lot of risk. Central bankers, like this is a super unpopular in crypto, and like they'll mess up. Like central bankers will mess up again, but they're the best that they've ever been. They have 100 years of monetary policy experience. They have the most data that they've ever had. They have access to real-time credit card data. They saw the mistakes that were made in 2008, and they saw the success of what Ben Bernanke was. Like they're getting really good at their job. Now they are human. They will mess things up. But every time something bad happens, we run to the central bankers and like guys are on CNBC screaming like the Fed should do something. Then the Fed does do something. It opens up swap lines, it buys back bad debt. And guess what? Like the financial system keeps going. Like they're getting really good at fighting recessions. And I like, look, again, they will mess up, but over the long term, I would not fade that.
Okay, awesome. So let's pivot away from macro a bit and talk about, I guess, the antithesis of macro, which is meme coins or attention tokens, I think is another way you describe them. They were all the rage this cycle. In some ways, they kind of still are. Certainly, I think there's a lot of saturation now. And the main difference from this compared to previous cycles is just the ease with which one can deploy one for essentially no money, $2 or whatever on Pump Fund. What's your kind of take on the state of meme coins?
Yeah, the state of meme coins, I think that they are the most accepted and like simultaneously most hated that they've ever been, which I think is really interesting. I think that they are like the defining like subsector of this cycle, which again, like people really hate. But I think look, they like meme coin activity like will fall 90% like it always does. Like that will happen in the next downturn. But I think that meme coins, like, I think the narrative gets it wrong in that like they have had staying power. They are here to stay. They are not ephemeral. The reason that I believe that is because to me, meme coins are like an extension of traditional gambling. So when I think about like gambling today, like we all know that it's growing faster than GDP. We all have people in our networks that are using DraftKings and applications to gamble quite often, almost on a daily basis. I think that the reason gambling is super successful today is because we are richer than we have been, just like globally. Maybe it's not as rich as we want to be, but people have more disposable income than they've had historically. And gambling, like, it fits into like this app paradigm that gives retail users like really short feedback loops. So you can think of like an algorithmic feed or a push notification or this battle to minimize latency at the app layer. Like short feedback loops create like sticky retail users. Um, I think that gambling apps today are successful because they allow individuals to return multiples on capital over those short time frames, over those short feedback loops. And I think that they're fun. And I think across all those dimensions, meme coins like are an extension of that trend. So like meme coin trading, right? Like you can make money over short time frames. That's the short-term feedback loop that you need. It preserves the potential to like make multiples on capital. And it increases like fun in the same way that gambling does. But like further like reduces that mental friction of like risk taking. So if you think of like what a gambling app does, right? Let's say DraftKings. Um, like you can get a payoff within a game, so a 2 or 3 hour period. You can get a payoff within like pitch to pitch on an MLB game, and you can like have fun doing it instead of like investing in traditional markets. You can like bet on the game. Meme coins are like the same, but except you're like betting on the latest social thing. Like to reduce risk taking to like throwing $100 on man and finance coin rather than like having to think about like which team has the upper hand on another team is like to me an extension of that trend in like consumer retail risk taking. So I think that that's pretty underappreciated and like is like will meme coin activity dump like 80-90% in the next drawdown? Like of course. But we can look from like cycle to cycle where meme coin activity on like a 4-year basis, on a crypto cycle basis, keeps extending, keeps improving. And I think that that's underappreciated by the market.
So one of the best stats I saw you post recently on this topic is Americans wagered 90 billion in 2022 at casinos and in gambling apps. Swift did 186 billion in volume since its first sex listing in January of this year, which seems to suggest that, as you said in the tweet, the market for meme coins is larger than what people give it credit for. My question with this, and I tend to agree with the analogy and with the framing here, but what I wonder is what will the form factor of this genre of app, whether it's attention tokens, meme coins, essentially betting on tokenized attention, whether it's, and it could be the meme of the day, it could be pop culture, it could be like Politify, what you see with these election coins. But the form factor is interesting because with sports, you have rules, you have refs, you have this larger industry that is, hopefully ensuring there's no foul play happening, games aren't fixed. There's knowledge of how the games work. So people in some ways think they can kind of beat the market and, oh, I know this guy's going to win this fight. I'm going to put some money on that because I watch his YouTube channel or something like that. With meme coins, it's just such a wild west right now. You're having this meta where people will like bought a token to be king of the hill and pump fun and then just sell all the supply immediately. The hit rate for some of these has gone way down. The saturation has gone way up. How do we think we can maybe formalize this? Is that even possible? Just given the permissionless nature of crypto, and make it more, I guess, attainable for someone to get a quote unquote win versus. And let's use online sports betting as an example. I mean, these gambling apps are really good at, they bring you in the door with incentives. Maybe they match a bet, and most people have won at least one, parlay or something, or maybe not a parlay, but one individual bet. So you kind of have some momentum there. For meme coins, I feel like these days, especially if you just go on Solana subreddit, everybody's just losing all the time. It's a bloodbath out there.
Yeah, I don't know enough about the hit rates. It would be interesting to like see a study on that. I'm sure that we will. Um, But yeah, I don't know enough about the hit rates to say. Um, Look, if I knew the answer, like I'd probably build that thing because I do think that it's a big market. I
Yep.
do think that's a big market because like it just like it further minimizes that friction to like retail risk taking and it makes it fun. Um, but when I look out into the market, like I do see, like think of where we've gone over the past, say, 6 to 8 months with this meme coin craze, where we started without pump fun. Now we have pump fun. Now we have pump fun plus social and like this kind of Twitch streaming that they're doing. Now Unlonely is integrating meme coins into their live streams. Now Dex Screener is kind of verticalizing with a launch pad as well as like the trading UI. You're seeing the market kind of like form into a few different shots on goal here. I know Raj from Solana tweeted that he would love to see a TikTok for meme coin trading. And it's kind of just like serving you up like, or your cohort, like what kind of memes would be relevant for you. I think that that goes a long way in formalizing it, but I don't know if that's like the like kind of the end state form factor. There's going to be a lot of experimentation. There really is. There's going to be a lot of experimentation, and I'm excited to see where it goes. Do I know where it's going to go? Um, Look, I'll be watching Pump Fun and Lonely's kind of like and Unlonely's like kind of social social streaming plus like a launchpad product to see how to see how that takes off and like kind of take it from there. I really can't say.
I was listening to an interesting interview with Tarun Chitra, and he was sort of flipping it around and saying maybe with meme coins in the future, you'll be able to have this incentivized trending list, almost like how you have on Twitter, the top 10 trending topics. You can almost use meme coins in the future state to get this crowdsourced version of what actually is trending in the world at the moment, which I thought was an interesting take.
Yeah, you're kind of seeing that today too, right? With like, I think Dex Screener and Gecko Terminal will have that like trending coins list.
Mhm. Yeah.
Unfortunately, from like a money making perspective, like it's probably late if it's there. Um, but yeah, I don't know the hit rates. And you know, thinking about it, like I don't think I am that worried about the hit rates. Um, I wrote a newsletter for Blockworks, kind of likening this to sports gambling. And like 90% of the males in my network do sports gambling. None of them make money. The hit rate over a long enough time frame is like it's so sorry. I guess that's not hit rate, but none of them make money and they lose quite a bit. It's more like fun. There's a social aspect to it, right? So like the DraftKings, college football, um, like uh, Barstool Sports paradigm is like very much like the deck screener, crypto Twitter, and like crypto podcast paradigm, right? Where we like taking these risks, we mostly lose, we like talk shit to our friends about it, and then we like listen to podcasts about meme coin trading and we talk about it on crypto Twitter. Like it's kind of like the same thing. There's like this
Mhm.
social market forming around these industries. Like we're doing it right now,
Yeah.
right? We're doing it right now. So yeah, it's there are a lot of parallels there. I'm excited to see where it's going. I'm like really rooting for Pump Fun. I think it's so cool that they've generated like 60 million in total revenue so far. Like
Yep.
what a stat. I think they had one day where they outpaced the daily revenue of Ethereum. Like it's fantastic. Absolutely fantastic.
Yeah. It's a lot of people would say are upset with the saturation they brought in, but I think what they've done is remarkable genre of applications. In some ways, I guess you can consider Pump Fun like the actual TikTok of meme coins. I mean, they kind of boiled it down to a really simple feed, very just constant, chaotic, and one's outranking the other on the homepage and trying to be king of the hill. Um, yeah, I think they're going to do really well. I'm not super convinced, at least in the short term, one can kind of compete directly with them. if one were to, it would look very different. Just like maybe the analogy is they're like MySpace, and then Facebook came along and did a lot of things just completely differently that resonated with a larger audience. That's kind of what would need to happen for someone to actually compete with them. But I'm not super convinced it's going to happen anytime soon. And now the other funny thing is you're seeing like social apps like Not Plays or something like that. It's a Gen Z social media app that's number one in the App Store right now that does look like MySpace. And so you had a complete kind of reversal of that trend back to where we started, which is kind of funny to see.
Sal, are you seeing anything in like the Ton ecosystem around meme coins?
Yeah, there's some stuff happening. The key challenge for me at least is I can't actually use the wallet. And it's kind of hard to even just get Ton in the US. So I haven't been able to try as much, but there absolutely is stuff happening there. I think it's going to grow pretty rapidly too. Once again, I think it's going to start getting listed. Ton that is on more exchanges. It's going to be more easy to access, and I think eventually the wallet will be usable in more jurisdictions, and so that'll definitely help. But Solana is still, I think, the king of memes for the time being.
I think one thing I like about Pump Fun as well is it's almost a feeder app onto the wider general purpose DeFi applications on Solana. So as long as it gets over, I think it's 69K or something market cap, it then moves over to Radium, and then everyone can access it and buy it if they want. Whereas I think a lot of the other SocialFi applications, which are doing really, really well, but generally the tokens which you can buy, so Friendtech being an example, the tokens which you can buy are within this walled garden. They're not open to the broader public. And I just don't know if that friction is maybe holding them back. And maybe the big SocialFi applications of the future are going to be closer to Pump Fun, where they are utilizing the broader infrastructure which is already there, rather than forcing everyone into this walled garden. But wondering if you've got any thoughts on that, or the broader SocialFi ecosystem.
Yeah, I mean it's really interesting. Like speculation is very much crypto's superpower, financialization. But I think back to like my own personal experience with Farcaster, where I liked it I liked it so much more before the speculation came. I believe that their user numbers are still strong. But it's not obvious to me that it helped, because there has been kind of like a reset in users. Um, it would be great if we saw more applications um, allow varying degrees of speculation over time instead of just opening up the floodgates. Like maybe allow a subset of creators, or just across like certain dimensions, like selling NFTs, or maybe like the promotion would have to be like approved in some way, because it can get like really scammy really quick. I'm really rooting for SocialFi. I think that Farcaster is a fantastic shot on goal. I think they've done mostly everything right so far. Um, but the kind of like opening the floodgates to speculation within SocialFi, it's not clear to me that that's the right path. I think it needs to be more tamed and like tailored and like slowly allowed on these platforms over time, which goes against the ethos. It's a catch-22, right? Because then you have like you're selling to crypto people inevitably. Like those are your first customers, and that might go against the ethos. So I think it's really challenging. But I'm excited to see what Farcaster does next.
I often think how negative social media is and all the negative effects it has on young people, and then I think about what's it going to be like if there's just unbridled speculation put on top as well. It's a slightly terrifying thought, and it's not really something that people give much airtime to.
Yeah. Speculation is super useful. Like deep in, fantastic. Like bootstrapping something like Bitcoin, like who would have thought like that you can create a system like that, so solely based on game theory and speculation. Um, Injecting it into like social applications is super tricky. Um, Again, not exactly clear to me that like it needs to be tamed, it needs to be tailored, it needs to be like slowly allowed in these applications over time.
Well, that's again, like, not to make it full circle. That's kind of why I like the strategy these apps on Ton are doing. which is everybody wins. There's no way you can lose by just like kind of farming a certain mechanic in a game. And then the speculation kind of just happens over time as you use the actual game, right? You get past the distribution mechanism and all right, yeah, now you want to level up your pet or whatever and kind of invest time and money into this thing in hopes of beating someone else. Then you just allow certain classes of users to do the more perhaps I guess dangerous behaviors. And this is kind of an artifact that was common in Web 2 games, MMOs, right? Like only 1% of the players or so were set on doing PvP mechanics and kind of leveling up the characters. A lot of them were just there for social reasons or just to explore. So I suspect we might see kind of similar like user personas play out with social when we start to embed speculative primitives inside the app itself.
Appreciate we're running out of time, but maybe a final quick question. But Ryan and Sal sort of got a question for both of you, but do you have any advice for people that would like to become analysts within crypto?
Sal?
Nice. Yeah, I can kick it off here. Yeah, I mean, I've interviewed a lot of people when I was a researcher at Galaxy, and the number one thing that stands out like a sore thumb is intellectual curiosity. It doesn't really matter what it's about, but if I can sense that you know more about something in crypto than anyone I've ever met, which is not that hard to do, by the way, because crypto is so big and no one has time to go into all these rabbit holes. That is the best way to start. Just follow your curiosity. It's very, it's a lot easier to kind of get into this complex technical stuff and to find the most obscure projects and learn about them when you really care about it. Just think from first principles. Don't just follow the trends. Don't try to be the 1,000th guy to evaluate perp dexes on Ethereum, right? Like you're not going to stand out that way. But if you're the ton expert on click to earn, I guarantee you there's a hedge fund that'll probably hire you tomorrow because they think they can make money there, and no one else knows enough about them because they're kind of silly. So that's kind of my advice.
Yeah, I would say just keep doing things. I totally agree with Sal, but yeah, just keep doing things. Like crypto is the easiest place to kind of put yourself out there. Think about TradFi. A quant guy doesn't want to tell you about his strategy. It's like his secret. Everyone wants to talk to you in crypto. So just keep doing things, just keep talking, information, like you generate information, that's feedback. Yeah, just dive right in.
Amazing. Ryan, thank you so much for joining us. Let's revisit the whole conversation in 6 months or so, see who was right about what.
Totally. Let's do it again, guys. Had a blast.